On the bottom of your screen, you will see that FM told GOMs to work proactively on the GST reforms. FM also assures that 2 slabs of GST structure, that's only good for the economy right now, as they say that the government is committed to actually cut the tax burden. And that's what Prime Minister Modi has also promised for a Diwali gift as well, with GST rate rationalization to be at play. And like we have been flagging off, that just 2 slabs will be likely. But let's take it forward and understand with respect to the markets, where are some opportunities that you can still find at this point in time. Let me welcome Sunil Subramaniam on the show right now. Hi Sunil, very good afternoon and thank you so much for your time. And yes, of course, GST and the headlines over there, they are making big moves on the markets and the stock prices as well. But a whole host of sectors that are involved. How do you see this news flow, and any particular sector where you are most bullish on?
So let me look at it this way, right? The GST has been looked in conjunction with the S&P's upgradation of India. I think the two go hand in hand. They came within a day of each other. The reason I'm saying that is that, see, domestic buying support has been strong. Domestic inflows have been strong, and fund managers also been buying. In fact, they've brought down their cash balances from the March high by the June end. So this buying support was, however, not so focused on the consumption space before the GST announcement. So post the GST announcement, obviously the broad range consumption pack has got the attention of domestic fund managers and has had a decent rally. But what I would say is that the real upswing for the market is going to come from the S&P rating as it flows through into a re-rating of India in the hands of FIIs. And this, I think, is the key one, which is because FII support has been lacking. They have been very off and on. April, May, June, they came in. July again, they started selling. August, they've been selling. So it's a mixed bag from the FIIs. And when they turn over into a positive frame in India, and what's not helped for India has been the valuations, right? So when you're dealing with a reasonably high valued market like India, you need the growth triggers to be clear. And so for me, the GST actually shows the growth trigger to the FIIs for them to come back into India. That's number one. Second, the S&P upgrade means that whenever they put into the model the riskiness of India in terms of calculating how much overweight, how much underweight, or for an algorithmic trading which decides to allocate money to that market, this rating will make its part, and that should also increase the interest of FIIs. So from that perspective onwards, when you're now investing, I would switch my attention gradually from 2 things. One is, where are the FIIs likely to come in? And if you see that, for them, the banking space, the IT.
No, absolutely, Sunil. We totally take your point that not just the GST rate rationalization, but coming along was the upgrade on India credit is what we have seen, and that's boding well for the markets. But I believe we have got you a bit on a patchy line. Let us fix that. But meanwhile, let's